If you are considering starting a business in Denmark, it is important to approach the process with the same structure and discipline you would apply to any major strategic initiative. In this video, we will walk through the essential steps and requirements so you understand not only what to do, but also why each step matters. Let us begin with the foundation, clarifying your business model and market positioning. Before you ever file a form, you should be clear on what problem you are solving, who your core customer is, how you will differentiate in the Danish and potentially broader Nordic or EU market, and what your revenue model looks like. Denmark has a relatively small but high-income population, strong digital adoption, and a high cost of labor, which means your value proposition should either justify a premium price, leverage technology to gain efficiency, or tap into export markets from day one. Conduct a basic market scan. Review competitor offerings, pricing benchmarks, typical customer acquisition channels, and any sector-specific regulations. This upfront clarity will guide the legal structure you choose, your capital needs, and even your hiring plans. Once you have defined your concept and target market, the next key step is choosing the right legal form. For many entrepreneurs, especially those looking to limit personal liability, the most common structures are the enkeltmandsvirksomhed, which is a sole proprietorship, and the anpartsselskab, or APS, which is a private limited company. A sole proprietorship is simpler and faster to set up, with fewer formal requirements. It may be attractive if you are testing a concept at small scale, have limited risk exposure, and want minimal administrative overhead. However, you and the business are legally the same entity, so your personal assets are not fully shielded from business liabilities. By contrast, an APS requires a minimum share capital, but it creates a separate legal entity, limiting liability to the capital invested. This structure is typically preferred if you expect to take on employees, raise external funding, or sign significant contracts. There are also other structures such as the aktieselskab, or AS, for larger ventures, partnerships for professional services, and specific forms for non-profits, but for most new, small, and medium-sized businesses, the decision is usually between a sole proprietorship and an APS. Once you have chosen your structure, you will need to navigate the registration process. Denmark is known for its digital administration, and that extends to company formation. The central step is registering with the Danish Business Authority, known as Erhvervsstyrelsen, via the online portal. During this process, you will define your company's name, which must be unique and comply with Danish naming rules. Select your industry code, provide information about owners and management, and upload any required founding documents. For an APS, this includes articles of association and documentation of your share capital. Upon successful registration, your business will receive a Central Business Registration Number, or CVR number, which is the identifier you will use in virtually all interactions with authorities, suppliers, and customers. For sole proprietorships, the process is even more streamlined, but you should still ensure that your chosen trade name is available and does not infringe existing trademarks. Closely linked to registration is the tax and VAT setup, which is an area where discipline from the start will save you significant effort later. In Denmark, you must register for VAT, known as moms, if your turnover exceeds a certain threshold or if your business model requires it from the outset. For example, if you are selling most goods and many types of services. Once registered, you will be required to charge VAT on your invoices and report and pay it at regular intervals, typically quarterly or monthly depending on your size. You should also understand your corporate tax obligations. Companies such as an APS are subject to corporate income tax on their profits, while income from a sole proprietorship is taxed as personal income. This distinction has implications for how you structure your own compensation, whether via salary, dividends, or withdrawals. It is highly advisable to set up basic bookkeeping processes from day one. Choose an accounting system that supports Danish standards. Define how you will manage invoices and expenses, and consider engaging an accountant familiar with local rules. Another foundational requirement is your personal identification and residency status. To operate a business in Denmark, you generally need a CPR number, which is the Danish Personal Identification Number, and NemID or Meet ID, which are used for secure digital identification with public authorities and banks. If you are an EU or EEA citizen, your right to live and work in Denmark is relatively straightforward, but you must still go through the appropriate registration with the national authorities. If you are from outside the EU, you may need a specific residence and work permit tied to self-employment or business ownership, and this will require a business plan, documentation of expected income, and sometimes proof that your business is of particular relevance to Denmark. It is important to clarify your immigration status early, as it can influence your banking setup and even which legal forms are practically accessible. With your legal, tax, and identification basics in place, the next priority is opening a business bank account and ensuring you can manage payments efficiently. Danish banks will typically ask for your CVR number, identification documents, and in many cases, a concise business description and plan. They will want to understand your expected transaction volumes, main markets, and ownership structure. Denmark is very advanced in digital banking, and many customers expect to be able to pay via cards or mobile pay, so you should consider what payment solutions align with your customer base. Setting up a separate business account is crucial not only for transparency, but also for managing VAT, taxes, and cash flow in a disciplined way. In parallel, confirm that you have the appropriate insurance coverage, such as liability insurance, professional indemnity for advisory businesses, and workers' compensation insurance if you will employ staff. Employee-related requirements are another important dimension if you plan to hire. Denmark has a well-developed labor market with strong protections, collective agreements in some industries, and clear expectations around contracts, working hours, and benefits. When you hire, you must register as an employer so you can handle income tax withholding, social contributions, and mandatory labor market schemes. You should provide written employment contracts that align with Danish employment law, defining salary, working hours, holiday rights, notice periods, and any probation arrangements. Be aware that while the cost of labor is relatively high, you also gain access to a highly educated workforce and strong institutional support for training and development. It can be helpful to consult with an HR specialist or lawyer to ensure your employment practices are compliant from the beginning, as errors in this area can be costly and reputationally damaging. Beyond the strict legal and administrative steps, there is a strategic layer to setting up in Denmark that many founders overlook. You should identify which public programs, incubators, or advisory services you can leverage. Denmark offers various support mechanisms for entrepreneurs, including innovation centers, export councils, and regional business hubs that provide mentoring, networking opportunities, and sometimes grants or soft funding, particularly in areas such as green tech, life sciences, digital solutions, and design. Engaging early with these ecosystems can accelerate your learning curve and open doors to partnerships and pilot customers. At the same time, invest in building a basic but credible go-to-market presence, a professional website, a clear value proposition in Danish and possibly English, and a focused approach to reaching your first customers, whether through digital marketing, industry events, or direct outreach. As you move from setup into operations, it is helpful to adopt a disciplined cadence for reviewing your performance and compliance. Set a simple monthly rhythm. Reconcile your accounts, review cash flow, confirm VAT and tax obligations are on track, and assess your sales pipeline and customer feedback. In Denmark's transparent and rules-based environment, being consistently compliant and predictable is a competitive advantage. It reassures banks, partners, and potential investors that you are a reliable counterpart. At the same time, maintain the agility to adjust your offerings based on what you see in the market. Denmark's size means that feedback loops are fast. You can often access decision makers and iterate quickly, provided you listen carefully and adjust. To summarize the journey in practical terms, validate your business idea in the Danish context. Choose the right legal form with an eye on liability and growth plans. Register your company and obtain your CVR number. set up tax and VAT properly, settle your personal identification, and, if relevant, residence status. Open a business bank account and configure payment solutions, secure necessary insurance, and, if you hire, comply fully with employment regulations. And finally, connect into the local ecosystem and establish clear routines for financial and operational discipline. Starting a business in Denmark is not just about satisfying regulatory requirements. It is about positioning yourself for long-term credibility and growth in a sophisticated, high-trust market. If you approach each step thoughtfully and invest a bit of time upfront in understanding the rules and expectations, you will find that the Danish system is designed to be efficient, transparent, and supportive of serious, well-prepared entrepreneurs.